Hey, Bulls and Bears, you're watching Bull to the Bust BX4. My name is JJ, back with another dose. Let's go ahead and get started right here. The New York robot cop got fired. Got fired. We see the mayor out there, some actor, I forget his name, Leonardo. RoboCop, it ditches the $12,500 RoboCop. The subway police cop, only $12,500. That's not much. And commuters say good riddance. Apparently, this was a bad cop. Now, when they first brought this out, of course, we're talking about artificial intelligence, robotics, replacing humans. So I guess cops can breathe a little bit of sigh of relief because robots will not take their job anytime soon. After the performance of this RoboCop, when they first announced this, they said, well, he's going to work, he, maybe she, it's going to work for less than minimum wage. It doesn't have to take vacation or bathroom breaks. That was the bragging point of the New York City Police Department RoboCop. It was 420 pounds, 5'3". I think it should have went on a diet. It didn't have to use the bathroom. That would be weird if it did have to use the bathroom. Wouldn't it be weird if a robot had to use the bathroom? Below minimum wage. Why were people complaining about it? Robots just scare people. Yeah, that's the point. Even regular cops scare some people, especially if you're a criminal and breaking the law. then it probably should scare you. It's a waste of taxpayer money, some people said. The huge robot couldn't climb stairs, and officers were tasked with serving as its human chaperone. Yeah, all you have to do is climb up the stairs to get away from this cop. Interesting. All right, so what do you think about that? Did you think that was going to work in the first place? I always thought it was very weird. There's a movie out, came out a long time ago called RoboCop. That was a lot different than this thing here that we see got fired. What do you think about this, folks? You might be sitting next to a NYPD RoboCop in the unemployment line if you're in the unemployment line. All right, so let's move on here to some other financial news. Here is an interesting one. This one caught my eye out of CNN here. Wall Street is worried about another regional banking crisis. But really, the stock market doesn't really seem to be worried about too much right now. It's almost as if the stock market knows that rate cuts are around the corner. So pretty interesting navigation that you can have inflation still above the target, which is supposed to be 2%, but yet we're going to be cutting rates now. So we haven't hit the target. We're still way above the target, and we're still cutting rates. So very interesting. So why would we be doing that if it wasn't some big problems? Well, the big problem is consumer debt. And we've got some more signs here that we're going to talk about in just a few minutes. The consumer debt looks like it's finally reaching an overflow level, like the cup is at the top and beginning to run over. That's what it looks like to me, but we'll talk about that in a few minutes. I'd like to hear your thoughts on it. Speaking of stocks, Chipotle stock, another 7.5% growth of Chipotle traffic. They've been raising their prices. People just love Chipotle. Chipotle beat earnings expectations, topped revenues. The reason I bring this up, this is one of those big moments, or one of these big investments that I really missed out on. I first went to Chipotle in 2003, and I lived in Tucson, Arizona at the time. I moved over there for a job. I didn't really like Tucson. Well, actually, I liked it, but moving from San Diego, you can imagine from San Diego, the weather here versus Tucson. So maybe if I would have stayed there for longer, I would have adapted to it. But I lived there for about a year and a half, and it was pretty agonizing. It did get easier, though, I should say. And very nice people there. The desert landscape's pretty cool. But anyways, I was in Tucson and went to Chipotle for the first time. And I had eaten at a lot of different Mexican food places. And this was just something extraordinary. I mean, it was really, really good. I couldn't really pinpoint it. It tastes grilled, like grilled chicken or grilled whatever. Even the vegetables are grilled, I think. Everything tasted good. It tasted great. And I should have invested back then just off of the fact that it was so much better than other places. And I look at this chart here, and I want to bring this up here. Looking at a chart going all the way back to 2007. Okay, so they didn't become publicly traded until 2005. So I couldn't have bought it at the very beginning when I first went there in 2003. But they were, let's see, $55 range, and now we're $2,487. You could have held on to that stock for 10 or 15 years, buying a few hundred shares back then, and you could basically almost retire, depending on your lifestyle, depending on your budget. But it's one of those things that I really missed out on. Do you have a stock like that? I mean, we can all talk about the Amazon stock when it first came out, a lot of the tech companies when they first came out. That's just one of those that the reason that really gets to me is because I knew that the food was just superior, but I really didn't have money to invest back then. So I guess I shouldn't beat myself up too much uh, on that one because I couldn't have invested anyways. I guess if I would have changed my lifestyle and saved more, I might have been able to invest more back then. But let me know what your stock is, the one that you knew, even at the time, you knew was great, or the company was great, or that the company was going to become massive, and you didn't buy it. And maybe you had the money, unlike myself. I was pretty much living paycheck to paycheck in 2003. But let me know if you had one that you had the money, you knew it was a good company, but yet you didn't buy it for whatever reason, right? I think we all have maybe one or two of those stocks. Snap plunged 30%. That's a pretty big drop. Snap fourth quarter revenue rose 5%, while the company's net loss narrowed 14% from a year earlier. And this is Snapchat. I don't do much snapping or chatting. Actually, my social media involvement is not much now, except for YouTube and a couple other ones that I barely update and barely upload to and barely post to. Um, so yeah, look out because tech is supposed to be the place to be, and we see not always 30% drop. NYCB, this is New York Community Bank. Credit grade is cut to junk by Moody's. So if you're holding a stock and they cut it to junk, what do? Do you hold on to it and expect a bailout or expect a buyout? Maybe Chase will come in. Maybe one of the big mega banks will come in and buy all of the assets off New York Community Bank. They haven't failed. I'm not going to say that they will fail. It's possible, but it doesn't look likely that they're going to be able to make it out of this. And consumers are only going to become more delinquent and more um, unable to pay their bills, right? So that's going to be the next thing we'll talk about here. And this was a nice article out of Axios here. Let's bring it up. Credit card delinquencies spike, a sign of cracks in the strong consumer. We knew this was coming. We did see the delinquencies spike up starting over a year ago. And this has taken a lot longer than a lot of people expected. But I want you to look at this. And if you look to the most recent numbers here, credit card delinquencies 8.5%, and this is the purplish looking line there. If you go back, this is the same level, 8.5%, just about looks like mid 2006, maybe early 2007. So we're now, as far as credit card delinquencies, we're where we were about a year before the financial crisis kicked off. Looks like mid 2007, early to mid 2007, anyways. And we know that everything started hitting the fan at the end of 2007, going into 2008, and the rest is history. So if you just look at the percentage of delinquencies, we're right before, we're at the pre-financial crisis level. Now, does that mean that everything is going to play out like it did back then? Of course not. But when you look at the numbers, it is a pretty interesting comparison. We also see auto loan delinquencies up to 7.7%, the highest that they've been now since about 2011. So we're at a 13-year high. And that also was at about that level, just over 7%, looks like late 2006, early 2007. So does that tell you a story? Is that a warning sign that we see these numbers at where they were prior to the financial crisis? Pretty interesting. Does it mean that's going to play out exactly the same? Of course not. Think about this. What if back then, instead of allowing people to lose their homes and get foreclosed with the housing bubble going bust, what if they would have did, in 2008 what they did in 2020. They stopped foreclosures, they stopped evictions. And I'm not saying that they should or shouldn't have. I'm just saying that if they would have, prices wouldn't have came down. You wouldn't have seen a housing bubble bust. And all the people saying that there was a housing bubble, they would have been wrong, because prices would have kept going back up, just like we saw in 2020. 2020, housing prices should have come down with all the job losses, the shutdowns. But of course, they completely changed the rules of the game, and that didn't happen. So, how do we prepare for the next financial crisis, housing bubble going bust, the next economic collapse, if all they have to do is change the rules and it won't happen? Well, if they keep doing this over and over again, then you're going to see inflation continue to go higher. And pretty soon, inflation in itself is going to be the crisis. So when people hear crisis, economic collapse, they think about falling prices, markets collapsing, stock market down 50%, home prices down 50%. They expect that 2008 all over again. But we may not get it if the intervention and the money creation behind the scenes keeps flowing into the economy and keeps getting loaned out so people can spend it. And if they keep all these rescue programs in place, like the bank rescue program that's supposed to expire in March, then you're just going to see prices climb and climb and climb and climb. Now we've got rate cuts with the cost of living really not coming down, um, nowhere near 2%. And even if it was 2%, 2% is a false, phony number put out by the government. So how do we prepare for this, folks? I'm ready for inflation. I'm really hoping that silver gets unleashed from the price suppression, because that's going to be a really nice investment. I've been holding on to that one for a while. I know some silver stackers are starting to get very impatient. I get some of your messages sometimes asking me what's going on with silver. Well, if silver is ever allowed to find its real value, you're going to really be happy that you bought silver. And I'm not selling it or anything like that. I'm just saying that to me personally, that's the one thing that I think is going to be a big payoff. So we'll have to see, right? So how do we prepare for this? You let me know down in the comments. What's the stock that you missed out on? Mine was Chipotle, even though I really didn't have much money back then. What do you think about the delinquencies, where they were pre-financial crisis? What are we headed for this year, 2024? Is this the year? Let us know down in the comments. Myself and a lot of us here hopefully will be reading your comments. Keep stacking, everybody. We'll talk to you very soon. Bye for now.